Good evening, traders. It's Eddie here from TradeView. Welcome to this webinar series for 2018. As you'll know, if you're a regular, we did all the webinars last year with IC Markets, and thanks as always to IC Markets for having us present. It's good to be back. And it's good to be back this year and starting with a hot topic, which is cryptocurrencies. There's been a lot going on in the crypto space and in the markets in general. It's been very volatile. It's certainly kept us very busy. So great week to have this crypto webinar. All right, just before we get started, here's our risk warning. Of course, this presentation is just provided for educational purposes and you should not take it as financial advice. We'd like to keep these webinars fairly interactive, so if you've got any questions, please feel free to shoot them through. We do have quite a lot of attendees here tonight, so if I don't answer your question, don't feel bad. I will try and answer as many as I can. A little bit about us, for those of you who don't know, we're a privately held prop trading firm based in Melbourne, Australia, and this is our 7th year of operation. We trade all kinds of different products. I actually should add cryptos to that, but equities, futures, options, FX, and money markets across all exchanges across the globe. We're a systematic trading firm, which means that we follow a strict set of mechanical rules, and we're also automated. So we build automated systems and trade them, some of which you will get to see tonight. We've got 9 traders here at the moment. When I started, we didn't have that many back in 2013, but we're growing. We've got over 50, we trade over 50 different prop trading strategies. So these are all strategies we've created and automated using some of the tools that you will get to see here tonight. Just quickly about me, so you know who's presenting. I started trading in 2013. And I basically started like any other retail trader. I wanted to trade and make money. I specifically wanted to work at a trading firm, but when I started, I really didn't know anything. And I was lucky enough to get introduced to Rob, who is the head trader here. And I came and did one of the workshops that we do and learned how to start building some automated trading systems. I was already curious about automation because I could see that that was the way trading was heading. And now I'm here at TradeView full-time building systems. So enough about me. Let's hear a little bit about you guys. I've got a few new questions in there if you've been coming last year. You guys can raise your hands and you can actually type in some questions. Like I said, I like to try and keep it interactive. So how long have you guys been trading for? Just type it in there, 6 months, 12 months, or over 12 months? We're getting quite a lot of people over 12 months there. 11 years from Freddie. Complete newbie, James. Ulrich, 12 years plus as well. Sean, 48, taking it out so far. All right. Quite a lot of experienced traders. Michael, how you doing? Long time no see. Lorenzo, how are you, mate? And Peter, how you doing? We do have a lot of people that are regulars. All right, we've got a few new traders in there, but a lot of people with a lot of experience. Oh, Sean, 48 months, not 48 years. Okay, he doesn't take it out, but John there has topped it with 30 years. So, all right, a bit of a mixed bag, but I generally say that most of the guys here tonight have 12 months plus experience for sure. And who here wants to trade professionally or who's already trading professionally for a firm, or they don't have to work, they can make a living from trading? So you can type in there what you would like to, or you are. Hey, Peter, how you doing? James wants to go pro. Very vocal there, James. Moella is, yep. A lot of people trying. Mark, how you doing? Good to have you. Okay, quite a few experienced people there. Freddie in Mexico making a living, fantastic. All right, there's a lot of people there. Sorry, I can't get to you all. And who here doesn't want to trade professionally but would just like to generate a second income from their trading? Brett wants to go pro this year. That's great. Samuel, he wants to, but he's green, he says. All right. Yep, a few people there as well. All right. Teddy wants to make his primary income from trading. And John. All right. Fantastic. That's what we like. Who here wishes they had more time to trade? I'm going to say probably everybody in there, so we'll keep going. Sean says, can you view everyone else's questions? Sorry, mate, no, you cannot see them all. And who here is already an automated trader? So, as I said, we're an automated trading firm, but we're actually finding increasingly more and more automated traders. Marcus Shorts is, yes. Alan's trying. Michael, yes, we know you are. And Mark, yes. All right. Dan, no. Okay, that's all right. All right, few people not, but we do have some automated traders. Fantastic. And of course, for this webinar, who here trades cryptocurrencies or who has traded or is currently trading cryptos? Not yet. No, someone's traded some Bitcoin. Holding the others. Stefano. Of course. Yep. No. Yes, has. All right. Someone in there has said hodl. They're hodling. Okay, Rick, all the coins. And Richard with the altcoins. All right. Oh, Patrick's jumping on the hodl bandwagon. Fantastic. All right, few crypto traders in there. And who's committed to getting outstanding results this year? So I'll actually, I'll bring something up at the end, but I mean, look, I'm definitely keen to speak to people who are serious about trading. So John is fantastic. Sophia asked if I hodl. I don't hodl, Sophia, but we'll show you some of the things that we do tonight. All right, a lot of people there 100% committed. Fantastic. All right, great. So what we're going to show you in this webinar, we're going to first understand some of the characteristics of cryptocurrencies. And when I was writing this one up, I realized I probably could have talked about a lot of things in this webinar, and I really had to try and condense it. But let's understand some of the main characteristics of cryptocurrency, specifically, I guess, in terms of trading them and actually trying to make some money from trading them. We'll look at the rewards and, of course, the risks involved. I do need to say that cryptocurrencies are a very risky asset class. So although there's potential for big rewards, there's also a lot of risk involved in trading cryptocurrencies, and we'll cover some of those as well tonight. We'll discuss some of the strategies that we use to trade cryptos. So like Sophia said, do I hodl? If you guys know that, of course you do, all crypto traders. No, not really. I will show you some of the stuff we do. And then I'll explain why we chose those types of strategies. So I actually think of all the webinars I've done, this is a really interesting one because with cryptocurrencies, I mean, it's quite a new asset class, if you like. So you're really going in without a lot of prior knowledge, if you like. What we'll do is we'll build one of the strategies live in EA Lab, if you guys let me, and it'll probably take about 5 minutes. So you get to see how we actually program an automated strategy. And then we'll test the strategies. We'll do an automated backtest and see how they perform. And as I said, cryptos are quite a unique product, so I really did want to get into a little bit of background information first. Freddie, good to hear you looking forward to learning. Fantastic. I could tell you're very eager at the start, so it's not a bad thing. All right, so just quickly, what are cryptocurrencies? I tried to keep this pretty brief. Basically, a cryptocurrency is a digital asset designed to work as a medium of exchange, and it uses cryptography to secure its transactions and control the creation of additional units, and also to verify the transfer of assets. So basically, we're not going to go into all the cryptography. To be honest, it's not really a question for us. There's a lot involved there, and you know, we work with some pretty serious quants, and even some of those guys say that they don't necessarily understand all that goes into the cryptography. So you don't really need to worry too much about that stuff in terms of trading, but that's what a cryptocurrency is. Regardless of whether you think cryptos will work as a long-term medium exchange, right now they are a tradable product. So they have got to a point where you can trade them fairly easily through IC markets. and you obviously can trade them and make money from trading them, regardless of whether you think that there's a future for cryptocurrencies as a means of exchange. You could trade cryptocurrencies in a few different ways, which we'll actually cover tonight just briefly. But on an exchange, there's Bitcoin futures product or as a CFD. So trading through IC markets, which we do, we're trading the cryptocurrencies as a CFD, which is actually, I think, the easiest and safest way to trade them. What's this thing here? Somebody else posted about it before. Does anybody know? Maybe it's just the guys in this office. Dogecoin. So I think that's how you say it. Sophia's onto this. Fantastic. So basically, just as a little bit of a joke to bring it up, this Dogecoin is a cryptocurrency that someone created. I think it was back in 2013 or 14, as a little bit of a joke with an internet meme. And it's actually, people have actually bought this coin, okay? And even the creator of it, he says he doesn't really understand why people bought it because he created it as a joke. All right, so there's a lot of different cryptocurrencies out there. This is one of them, believe it or not. And you might think that, you know, this sounds pretty crazy. Someone's created a joke, but does anyone want to have a guess at let's go for the highest market cap of this coin, which was actually, was on January the 8th of this year. I'll bring it up in a sec. Highest market cap that this got to. So it's dropped off a little bit at the moment. Digby says 2.5 billion, 1 billion says a few people. I mean, look, it's dropped down now to a measly $500 million market cap, but at its peak, almost $2 billion, okay? So people have actually bought these coins, all right? I don't know what people are going to do with them, where they're going to trade them, what they're going to buy with them or what they do, but I mean, it's got had a market cap of $2 billion. So that might give you some kind of insight, if you like, into what's going on in the crypto space. And you know what I think this dog would say about it? I think he would say, wow, it's pretty amazing. All right, that's my one joke for the night, ladies and gentlemen. So a few different ways that you can trade cryptocurrencies. Actually, there's Sean just saying that he bought Doge back in June. Fantastic. I hope you made some money from it, Sean. So there's different ways to trade cryptocurrencies, which we'll just cover quickly. So you can trade them on the basically on an exchange, like a Bitcoin exchange, which I'm sure you've all seen in the news. To me, that seems pretty risky. A lot of people probably bought and hold on the exchange. You've got a lot of risks, such as hacking. I think recently there was one that had that was hacked and lost about $500 million worth of Bitcoin. Whether they had it in the first place, I mean, I don't really know. A lot of the exchanges, I mean, it's the whole crypto market in this way is unregulated. So you can buy and sell at an exchange, but the exchange is not regulated by anyone. So IC Markets, for example, is regulated by ASIC in Australia. But cryptocurrencies, they're not regulated by anyone. So that was one of the appeals to start with. That's also, of course, one of the big risks. So if you have a lot of Bitcoin somewhere and $500 million gets hacked, good luck basically getting it back. Okay. Bradley says it was a coin called NEM, $50 million, $500 million, he says. All right. And Dennis there wants to create his own called Dennis Coin, I think. It's, good luck to you, Dennis. Probably someone will buy it. Basically, when you trade on the exchange, you're owning physical, if you like, Bitcoin. I mean, it's not a physical product, but you get a sequence of numbers, which is your Bitcoin, I guess, if you like, and that's what you own. So if you lose the numbers and you don't know what your Bitcoin is anymore, then basically you've lost your Bitcoin. On the futures exchange, so recently the CME created a Bitcoin futures contract. I did read somewhere else, I think the NASDAQ wants to create, I think it was another Bitcoin contract, but maybe a little bit different. The CME one is settled in cash. And basically once the futures got launched, that allowed the big boys to trade and to trade heavy. you'll probably notice that I think probably some big changes in the way Bitcoin was traded started to happen after the futures contract was released. And as we said, as a CFD through IC Markets, you can just trade it like any other CFD. Leverage is available, IC is regulated, and they've got a whole heap of different cryptocurrencies. I think I put a bit of Bitcoin in here because it's probably one of the most well-known ones, but obviously there's other cryptocurrencies as well. And these are the products that IC Markets offers. So Bitcoin, Bitcoin Cash, Ethereum is another big one. We trade Bitcoin and Ethereum. I'm not sure if any of the guys here trade anything else. I know Rob, the boss, definitely does Bitcoin and Ethereum. Litecoin and Dash, they're all available through IC Markets. All right, so just in terms of different styles of trading, if you like, with cryptocurrencies, I thought this was pretty relevant. There's the fundamental style. So for example, a lot of people bought Bitcoin early because they thought that Bitcoin would replace money. So they're making a fundamental decision based on what they think is going to happen in the markets. And Ripple too, says AD. All right. So usually, and I'm just generalizing a little bit here, but usually these type of people who think that Bitcoin will replace money, they're usually long only. So they just buy and hold the Bitcoin or some of the cryptos. So these are more of your, it's a fundamental style of trading, and these are more, if you like, your fundamental type of people. A lot of these people also tend to buy the dip. So they believe that Bitcoin will replace money, for example. So when there's a pullback in the price of Bitcoin, they'll just buy some more because there's no doubt that Bitcoin is going to be the future of money and the price is going to go up. And then some people, it's a little bit less common, they might be contrarian and then they might try to short on bad news. Say, for example, China comes out and brings in some regulation and says Bitcoin trading is bad. Some people might take the fundamental view that that's going to mean a collapse in cryptocurrencies and they might actually try to short the market. All right. And then, of course, we've got technical traders. So technical trading is more what we're going to talk about tonight. The technical trading for Bitcoin works just the way you would trade anything else technically. So generally by indicators or price action, you can trade it. You can trade any cryptocurrency as you would another system or strategy. Some of the ones we'll show you tonight, and I'll explain why, are volatility or trend-based strategies. And we've got mechanical rules, as I said, for all our strategies. So the strategies I'll show you tonight I've actually shown before, or very similar ones before, and they've got mechanical rules that can be automated, which we're going to show you. So why would you trade cryptocurrencies? Well, basically, volatility equals opportunity. So we love volatility here at TradeView. Like I said, the past few days and the futures has been, and commodities have been very volatile. And Bitcoin and the crypto has been volatile as well. We love that for trading. It means a lot of opportunity. We already have volatility-based systems, and it's another product that you can trade and add to your own portfolio. Some of the risks. With the volatility that we love, there's, that means big moves. So when there's big moves, you can have the risk of losing your house, says Bradley. Exactly. So you don't want to over leverage on the products. Bitcoin's had, I'm not even sure what the biggest day is. There might have been some that were $3,000 or $4,000 move in Bitcoin. All right. And I mean, if you don't have enough money in your account and you're leveraged up, you're going to dust that pretty quickly. Also, you can get stopped out fairly quickly or run out of margin because you can get big moves against you. So that's definitely one of the risks of trading a cryptocurrency. If you're trading through an exchange, as we covered before, hacking, dishonest operators, there's all sorts of websites in all sorts of countries, which we won't name, that you may be able to put your money out and you may be able to see your account going up. But when you try and take your money out, the money, funnily enough, is not there on the website, is shut down. So that is a big risk as well. So if he asks, do we mine cryptos? No, we don't. But you know what? I wish I had probably 2 years ago. There you go. But who knew? And they could collapse and go to zero. So much like a stock, they don't they're not like a stock index or a forex pair. There's no they don't have to have a price. They could go to zero. And they could be regulated by a government, like we said, China or any government, and then that would probably make them go to zero or close to as well. A couple of other ones. This one's from Robert Bubalowski, the boss here. He said Satoshi, the creator of Bitcoin, who nobody knows, could reveal themselves. We don't know if it's a guy or a girl or a group of people. You could say it's all a game or it's not even real. And that would obviously collapse the market as well. Basically, with cryptos, you're trading the unknown. So think of things like the flash crash on the Dow that moved 1,000 points, or the Swiss franc debacle that happened a couple of years back when they pulled the peg. It was pegged to the euro, and the market dropped 2,000 points. So with events like that, nobody could see them coming, and if you're in that trade, you're going to get hurt. So you need to manage your risk in case of scenarios like that. So basically, again, with cryptos, I mean, we don't know. It could go to zero tomorrow. It could go to 100,000 tomorrow. We just don't know. So in trading, you definitely have to take that into consideration because it's a big risk. All right, so now let's talk about some of the strategies that we use. So what we're going to do is we're going to take a look at 2 strategies today, and both of these strategies, I've shown similar things before, and I thought this was actually a really good opportunity because we just to show you guys what we do on a daily basis in terms of building the systems, and then also to show you that this is a brand new product. I mean, I think at the start of last year, Bitcoin was at about 1,000. All right, now I keep talking about Bitcoin again, but I think that probably led the way for most of the others. But it was at about 1,000, and it peaked at 20,000 just before Christmas. All right, so 20 times in a year. That's a massive increase. Okay, so you don't really, all that happened over the space of a year. There's not a lot of time to, we don't have a lot of data to test on and things like that. So if we want to trade a cryptocurrency and take it on, we've got to sort of use and adapt the strategies that we've got. So strategy 1 is a trend or a pullback strategy. And by the way, all the strategies I'll show you tonight, or both of them, they go both long and short. So none of them are just hold and hope for the best. They do get in and they do have rules for getting out. And I think that's important for you guys to understand that we're not just holding and hoping for the best. We're actually actively trading cryptocurrency, like getting in and getting out. So on strategy number 1, the trend or pullback strategy, it's a pullback and then a trend strategy. What we're looking for is we're looking for a pullback of a certain number of bars. You can run this on different time frames. I think this one in the testing I did it on an hour. Excuse me. And the entry is on a break of a moving average, so just keeping it pretty simple. What we'll do is we'll lock in a profits as the move continues, so we'll actually trail the stops up. That's something that I think is a good idea with cryptos. If you can get into a move, basically what we're trying to do with both of these strategies is get in the move, get some momentum, and then trail the stops up. And then when we do get that reversal, then we get stopped out. And the stop loss is going to be set under the pullback to start with. So you'll see this when I draw it up. Okay, so let's imagine, well, we don't have to imagine, this is a trend, okay? And what we're looking for first is we're looking for a pullback of a certain number of bars. Okay, so let's just call it, for example, in inverted commas, let's call it 20 bars below this moving average here. So the market's gone up and it's pulled back a certain number of bars, call it 20 bars, and I think this is an hourly chart. Then the next thing we're looking for after these 20 bars have closed beneath the moving average is we're looking for a close above the moving average. Bradley, yeah, was an hourly, but what you can do is you can actually test on different time frames. Then we're looking for a close above the moving average. What we'll do in this one is we'll put a fixed point take profit. I think I put it at about $1,000, just so that if it does pop, we can take some profits. But you may not even need a fixed stop loss on this one, because we're going to trail the stops, which is step 4. So what we want to do is wait for this pullback here. We'll wait for the break of the moving average, and then we're just trying to stay in the trade for as long as we can and trail the stops up. And we're either going to take profit at a fixed amount of points, which I think I just used 1,000, it was a round number, or we're going to get somewhere up here and then the market's going to reverse and we're going to get stopped out on the trailing stop. So we can try and take advantage of as much as we can. So when we automate systems, what we need to do is we actually need to really carefully define the rules of the strategy. And I'm just going to define the buy side rules here, but like I said, this does run long and short, and we do build it long and short. So basically the first rules we said before is that the 20 bars need to close below the moving average. And I'm just picking 20 as a number. We test these kind of things, but 20 is about right. I mean, look, if you were to pick 19 or 15, it's still probably going to work. All right. We've got a few questions there, actually quite a few questions about some of the settings, the moving average and things like that. What we'll do is if you email us after the webinar, we'll put our details out and then I can actually give you guys some of the settings. If you like, just ask. All right, and then if that occurs, what we're going to do is buy. And then for our stop loss and take profit, as I said, we'll have a fixed point take profit. And actually, I forgot to say before, sorry, let me just go back quickly. Whoops. What we're going to do is our stop loss will be below these 20 bars, so just below these 20 bars. So if it doesn't actually take off, we get stopped out fairly quickly. Sorry, I didn't put that in. All right. And we're going to trail just a number of points from the current market price. So like I said, I will actually give people the settings if they want to email us afterwards, or email one of the guys here, or chat to us tomorrow. It's just easier if I send them all out all together. But it's going to be a bigger number. So you don't want to trail too tight, otherwise you're going to get stopped out. All right. So what we'll do is we're going to build and test this model. I just want to show you guys how quickly you can actually build and test a model. Pretty much we can teach anybody to do what we're going to do tonight. Why build and test it? This is one of my favorite slides. Basically, before we trade something, and again, it's a little bit different with cryptos because they haven't been around as long, but we still do test the models. We want to know whether the strategy is going to get results like this, strategy A, or results like this, strategy B. So if we test a strategy and it doesn't really get very good results, then of course we're not going to trade it. If it does look like it could perform, then we'll trade it. So what we want to know is, is it possible to make money with this type of system? All right, so just again, call this a risk warning if you like, but just note that cryptos are very volatile. So in building these type of systems, we would expect that we would have a higher drawdown. So as a trading firm, we try and keep a very low drawdown. However, we do expect that with cryptos, we might be in for a bit bigger drawdown, and that's a risk that we would want to accept. Okay, Kai, how you doing, Kai? Kai actually, we met recently. These ones are hourly, but we can test on different things. All right. Okay, so Rick actually asked a question about the spreads on Bitcoin, which I will cover anyway. So I'll just keep that one in mind, Rick, and I'll answer it for you in a little bit. All right. Oops, strategy 2 breakout. I've given it away. Okay, so what I'm going to do is I'm going to bring up EA Lab, which is TradeView software. So we've built this software, and what it allows you to do is it allows you to automate your trading ideas. So people like myself, I can't program at all. I mean, I've literally pretty much zero programming skills. But what this does is it will allow you to build models without the need for any programming. So what I'm going to do now, it'll probably take me about 3, 4, maybe 5 minutes. I'm just going to build the rules of the trend strategy. So well, let me ask you guys, are you guys okay if I spend a few minutes and build this? Just let me know, yes or no. All right. All yeses. All right, good. Fantastic. All right, thanks. Good. I just want to make sure you're awake as well. Cool. All right. So the first thing that we're going to do, basically with EA Lab, you could build all types of models. You could build all the models that we run here with EA Lab. So you could do mathematical stuff or indicator-based stuff. It's really up to you. So what I'll do is I'll try not to explain too much and confuse everyone, but see if you can just follow along. I'll just try and explain in broad terms. And the first thing I'm going to build is those 20 bars that are below the moving average. So I'm just going to say if the highest close of the last 20 bars is under the moving average. And always I get a little bit nervous trying to talk and do this, so bear with me. All right. So if the highest close of the last, what did we say? So 20 bars is below the moving average, less than. Here, why don't we do this one? So why don't we say moving average? All right, why don't we just use, yeah, I'll put this in. Why don't we use 50? I saw people saying, is it 50? Let's use 50. All right, but like I said, if you guys want the settings, talk to us here, and whoever you speak to will organise that for you. We'll give you a buzz. All right, got a few questions there. Okay. Well, hang on, quick question. Rick, I'll come back to that one, buddy. Sorry, I'll just finish building this quickly. All right, and then if the bar close is above the moving average. So a really good thing with EA Lab is you can take blocks and just borrow them, duplicate them. So it makes things pretty quickly. If I had to code this, not a chance, but this is not really that hard. All right. A few people are still asking about the settings. What we'll do is we'll speak to everybody, or you can give us a call and we can definitely give them to you. So hold tight. All right. And then we're going to put this. So basically, we're going to put the stop loss below the lowest low of those 20 bars. And our take profit, we're just going to set to 1,000, just as a guess. So basically what we do is we build all this stuff and then we just test it. We play around and we see where we think it should be, but these are roughly right. And then we can just duplicate all that, and we can do the other side, the short side. Last low is, oh, hang on. Yep. I actually still get pretty excited by this stuff because we can build things really quickly. All right, 1 second. Mouse. And I think we're pretty good. I'll see if there's any questions there. All right. Okay. All right. Actually, Sean asked a question. The way EA Lab calculates it, actually calculates it for the the product. So it will actually be 1,000 points. It's 1,000. It's actually $1,000. So 1,000 there. Sorry, is $1,000 the way it calculates it. All right. So a few people asking how much all the software and everything costs. There's a few good questions there about some of the buildings. Sorry, guys, I can't get to all that stuff. So, like I said, give us a buzz afterwards or tomorrow. We'll be around for a bit and we can answer some more questions. All right, so basically what you could do then is you can actually see the code if you can program. I can't, so it doesn't matter. And then you download it. and then that's your EA there built. So I'm just going to off screen set that up, and I'm going to show you all the things that are on my screen. I've got 6 screens here. All right. One second. All right. Okay, fingers crossed I've got this all done right. Now, here's the question before, hang on. Chris, okay. Close. All right. Chris, I've actually downloaded this one previously, so I'll fix that, but thanks for pointing it out. No problem. Thanks, guys. Someone said I made a little mistake in there, but this one I've actually downloaded already, so it is all good, and I might have made a typo in there. Apologies. All right, so Rick was asking about the spread before. So with Bitcoin, which we're going to test on, the spread is quite large. So I've got it set here to 45. Could range between, could get up to 50 or 50 plus. Because it's such a volatile instrument, the spread will tend to blow out. So with the testing, it will just give us an idea of what it looks like. Of course, earlier on, the spread wasn't that big. So when we're doing this testing tonight, we're overcompensating it sometimes, and then we're probably about right for the current spread. All right. So what we'll do, we'll run this one, and we're going to run it just for a year. So I do have a little bit more data, but I just want to run it for a year because that's really when we started looking at things, okay? So what we'll do, we'll run it through, and we'll have a look at what the results look like. Oh, I've got something wrong here. All right, bear with me. Hang on. Sorry, it should be 1 hour. There we go. That's better. All right. So we can see that we took about 80-something trades, and we managed to make, what did we make? About $2,500. All right. So about 25% with a 4.7% drawdown over 88 trades. So you can see here as well that the trades went long and short. So there's buyers and sells in there. Okay. What I actually did in this first one, if you notice, I'll bring this back up. I didn't put the trailing in this one, but I did build one with some trailing. So I'll show you now the results of one with the trailing, which to be honest isn't too much harder to build, but I just didn't want to take too much time. Same deal, you can talk to us tomorrow and we can explain some of the trailing. But I'll show you the results now with the trailing. So this one just had that fixed profit target. This one with the trailing has the same profit target, but it also trails up. So we're locking profits in along the way. So we'll have a look. Okay, I think that should be okay. So before, remember, we made about 2,500. All right. So we'll have a look now. So now, similar looking equity curve, but we made about $25,000, okay, just based on this system. But we're looking at a bit higher drawdown, so about 12%. So who thinks that's pretty decent results for a year? About 25 grand. Yeah, most people top. This is Patrick. Fantastic. All right, James likes it. Excellent. Mark likes it. Fantastic. Cohen. Great. All right. So Mike actually says that the CFD closes during the weekend. So that's something you have to account for, Mike. You have to close your trades out before the weekend. If you want to do that, or if you want to take on the risk of holding them for the weekend, then you can do that as well. Roger says something there. That's nice, but we can't repeat. And Freddie says it will pay his monthly bills here in Mexico. Freddie living like a king in Mexico. Fantastic. All right. So that basically was the trend trading strategy. So all we were doing was we were waiting for that pullback as defined by 20 bars below the moving average, waiting for it to break that moving average, and then just staying in as long as possible. Look, it's not hard to see why that sort of strategy works. I mean, if you go to the daily, and I'll show this again in the next one, which is sort of similar. We're entering on a lower time frame. So let's just say we enter anywhere in here. We might get stopped out sometimes, but when we do get in, we tend to be able to hold it for quite a long time. And some of those trades we probably could have held, quite a long way up. by trailing the stop and giving it a little bit of room. All right, and then it would have worked quite well on the way down, because if we got in any of the trades here, it tended to dump quite a lot. So we've got where we had our 1,000-point take profit, would have worked really well in scenarios like this, where it dumped but got bought back up again, and we probably would have taken profit somewhere around here as well. All right, Russell, I can answer that one for you either later or tomorrow, no problem. All right, so that's the trend trading strategy. And this one we just tested on Bitcoin tonight, but you can see that you can see why we chose a strategy like that, as I explained. So anything that has this kind of chart, if you like, you could probably trade a strategy similar, although you might have to change the settings a little bit. All right, let's have a look at trading strategy number 2, which is a breakout strategy. All right. Okay, so Gary says, is margin prohibitive when trying to trade crypto? Gary, it's a really good question. Margin is something that you need to take into account. So if you remember one of the earlier slides, so it's very important not to be over leveraged, because you will run out of margin, okay? So you have to trade in an appropriate size for your account. We actually have strict rules for that, but that's in the proprietary models that we discuss in the workshops and things like that. So, all right. Rick, it doesn't really matter. What size account do you need to trade crypto, says Judy. Judy, that's a great question as well. With IC Markets now, I've traded some recently, and I've traded at 0.01. So look, I'm not going to tell you what size account you should have. That's something for you to determine, but you don't need to necessarily have a huge account if you're trading in a small size. Okay, so it's quite flexible with the contract. All right, so with the second strategy, what we're looking for is a break of the highest high or the lowest low of a number of bars. So it's going to be 1 to 5 bars around about is what we're looking at. I'll try and move along, or I'll run out of time like I do. All right, the entry in this case is in quite small size, so this one's for you, Judy. And what we're going to do is we're going to add to the position. Yeah, Rick just comes from the platform. All right. What we're going to do is same as we did before. We're going to lock in profits as the move continues. So pretty similar. That's why we chose these trend or volatility style strategies that, you know, look for a break and then basically try and hang in there, trailing up the stops until we get stopped out. The stop loss is going to be set above or below yesterday's high or low, depends if we're long or short. So this one we won't actually build because we won't have time, but it uses 2 time frames. So it uses the daily time frame and also uses lower time frames. So here's how it works. This is actually a daily Bitcoin chart, and it works like this. So what we're going to do is we're going to enter on the break of yesterday's high on a lower time frame. So here is yesterday's high. Let's call it this bar here, and we're going to enter when we get a close above this high here on a lower time frame. So I'll actually test this one on 5-minute, hourly, and 15, and it works on all of them. All right, so we're going to enter on the break there, and then what we're going to do is we're going to set our stop loss below yesterday's low. Apologies, I've actually drawn this one in the wrong spot. It should be here because that will be yesterday's low when we break it. Apologies, that one should be there. And then what we're going to do is same as before, we're going to trail up the stops and lock in profit. You can even see this, as I said, on a daily time frame. If you can get in here and give it enough room, you can hold on to these trades for quite some time. And like I said, this is not a buy and hold strategy. We're taking multiple entries. We're going long and short, but we are just trying to take the most out of all the moves. And then I just wanted to show you that you can do this on the short side as well. So same deal here. We're going to enter on the break of yesterday's low on the lower time frame. Here's yesterday's low. We're going to enter on the break here on 5, 15, or an hour. And then we're going to set our stop loss, where's my mouse, up here at the just above yesterday's high. All right, so as we did before, we'll just quickly define what the exact rules are. So it's long and short. If the bar close on a lower time frame is above yesterday's high, we're going to buy. Our stop loss is going to be below yesterday's low. And this one, we don't have a profit target. We're just going to trail the stops up And the way that we're going to trail is we're just going to trail a fixed number of points from market price. Again, we're going to give it a little bit of room. So a fixed number of points or dollars, if you like, from the market price. Let's just call it, I don't know, $500 to give you a little bit of an idea. So it's not going to be too tight, right? Maybe a day's range or something like that. So let's test this one and see the results. All right. Okay. Pull up my MT4. So this one I have built as well. I do usually build these before just to make sure I don't make any mistakes in the webinar. All right, this one's the breakout strategy, and what we'll do first, we'll test the 5 minutes. Actually, sorry, what we'll do, we'll test an hour first. So we'll do the hourly. So this one's going to take multiple entries, so it doesn't just have to take one and get stopped out. We'll take multiple, same time frames and everything, last year till now. And there's the graph. So a bit of a different equity curve with this one. And like I said, we run over 50 strategies here. So all the strategies are doing different things. So some might be making money and some might be losing. And that's the idea. So we can protect ourselves against risk. So this one here, it's got a bit higher drawdown at about 20%, which I'll be honest is quite a high drawdown. But we do expect a higher drawdown from trading cryptos that are a lot more volatile. And will return about 72% over the year. Okay, and then let's do, I'll just show you the other ones. I'll show you a 15. So this is on the 15-minute. So what we do with all the models we build at TradeView, we test different time frames and products and everything. We'll see where the models work the best. So similar type equity curve, but this time we made a little bit more money, over 100%, so $11,000 with still very high drawdown of 21%. Like I said, look, with trading cryptos, you can expect a higher drawdown. It definitely is something to be aware of, a risky asset. All right. So still able to make money, same sort of strategy, just entering on a lower time frame. So probably taking a few more entries there. There we go, 532 trades. So a good number of trades again, buys and sells in there. So we're not all long at all. In fact, there's quite a few sells in there. There you go. All right, and we'll do the last one on the 5 minute, which I think worked the best from memory. All right. Let's have a look. And there we go. It was about the same as the other one, maybe a little bit smoother equity curve. Still about 20% drawdown and a little bit more money, about 100 and what's that? 125%. Okay, so yeah, definitely able to make some money on all time frames. So that's the breakout strategy. So there's two different strategies, which basically they're not complex strategies. We try and keep things pretty simple, which we basically have those strategies before. All right, so I've built these strategies previously, and I've slightly adapted things to work on the volatility, the extra volatility of cryptos, but the nature of the system is basically the same. So I hope you enjoyed those ones. I'm going to come back and answer some of these questions in a sec. So if you guys don't mind, I can see some quite long questions there. Let me see if I can get through a bit of stuff, and I'll hang around and try and answer them for you. All right. So that's the breakout strategy. So the results, or an overview if you like. What you can do is you can take some of your existing strategies that you're already using, and you can see the type of strategies that we picked here tonight. I'm not saying that they're the only ones that work. I'm just saying there are some that can work, all right? And you can apply them to cryptocurrencies. So in my mind, as you can see, all those strategies were both long and short. And I think that's a lot better way to trade cryptos rather than just buy and hold or hodl if you prefer. With trading cryptos, I saw a few questions, I haven't gone over all of them, but about the data. So a year is not really a lot of data to test on. However, with trading cryptos, the fact is that they haven't been around for a long time. So as a trader, you need to make a decision, and you need to decide, do you understand the crypto market enough? Do you understand the risks? Do you understand how your trading strategies work? And are you prepared to take on some of that risk in trading cryptocurrencies. For us, we are, but you have to decide that for yourself. All right. So these particular models work on the volatility, locking in profits, and then trying to minimize risk. So constantly trailing stops up, and we're also taking profits at points as well. And with this type of strategy, we're getting into a position and then giving it some room. And because we're doing that, we tend to experience a higher drawdown. So if you can imagine on a Bitcoin chart, maybe let me just quickly pull one up. Some of these bars up here, I mean, they were, let's have a quick look. Whoops. What have we got here? So what's this here? That's nearly $5,000, okay, right, in one bar, in one day. All right, so I mean, probably you would get stopped out on something like that. But you know, with moves like this, that's still a big move. This one here, let's have a quick look. What's that? That's $1,700, $1,740. Okay, so if you can stay in this move, but I mean, you've got to give that $1,400 or $1,700, whatever it was, of space, or you'll get stopped out. So you've got to be prepared for that, and you have to build your models accordingly. So I've got a question for you guys out there, and I will come back and answer your questions. Don't worry, you're more than welcome to keep posting some. I will come back. Who here wants to build automated systems like the professionals trade? Yep, excellent. Ready to go, says James. Certainly would. Gary, Tony, yes. No surprises. Lots of people. Dan is new. Dan, yes, probably. You can contact us and we'll sort that out for you. Okay. Excellent. Most people, I saw some questions in there as well. We'll come back. Great. Look, what I wanted to show you guys, right, is that we do help people develop their own automated models. And basically it is like I just did on the webinar tonight. So it takes a little bit of practice to be able to build, and that was a pretty simple model. But look, it takes a little bit of practice, but I could show pretty much anyone how to build something like that in a weekend, and then you'd have your own automated system. And I just got, I think it's the next slide. I just got an email from one of the guys today. He's probably watching there and not saying anything, Graham. And he's a client or a student of ours, if you like, who's been working with us since mid last year. And we do get emails like this fairly regularly, but I just thought Graham's, I mean, it was pretty recent, and I really just like the way that he's gone about doing things. So he says, I'll just go through it quickly. And the reason I want to go through it is because I want to show you that you guys can actually do this as well, and the type of results you could get for yourself. All right, and that's why we're all here at these webinars, to learn and to improve our trading. So he says that episode 44 was timely, and he says it suits the way he approaches trading. That was one of the videos that I do weekly. So I do weekly videos and I show people how to build models like this one, working models. And he just goes through and he says, I mean, you guys can read that, but he says he's been watching a few of the videos that we do, which is great. And what he's done is he's taken bits and pieces from different videos that we do, and then he's put them together and he's using them in his own systems. He says down here that he's got a demo run, and when he says a demo run, this is actually trading in real time on a demo account, which is these results here. So that will be 99.9% the same as a live account, all right? Pretty close to 100, to be honest. And it's on one of the models that he got from the conference. We did an algo trading conference, and I'll put the video link up in the end to some highlights of the conference, and you can have a look. But Graham came to the conference that we did at the end of last year. And what he's done is he's taken one of the models that the boss, Rob, showed, and we showed it working on 5 different products, and he's running it on about 30 and built up a portfolio. So he's gone away, done his own testing with the stuff that we showed him, and he's been running it on a live demo for 3 weeks, and he's up about $350. So this is on a demo account. Had he run that live, he would have got 99.9% the same results, okay? So Graham, when he started, and sorry I'm going on, but when he started, couldn't build any models, didn't know how to automate, he can't program. I say this in the nicest way, but he's just like anybody else, and myself included, that wanted to learn how to build systems, except he's doing it. So he goes on to say a bit of other stuff, but anyway, I just wanted to bring him up because, yeah, I mean, I'm really impressed that he's come through and he's building his own stuff. Started with us last year, no experience, can't program. I mean, it's all in the nicest way, Graham, you're probably listening. And he builds regularly and he follows the stuff that we tell him. We give people unlimited support here, so he actually asks questions and uses support, and he watches and builds the videos that we do every week, and that's why he's been able to succeed. And I'm really looking forward to working with him to build more stuff, all right? And I'm looking forward to seeing how this goes. To give you a little bit of an idea, the online workshop that Graham started on a year ago costs less than $1,500, and in less than a year, I mean, maybe let's call it 7 or 8 months, he's trading some models that, you know, had he taken them live, he would have made $350. So, I mean, you can do the maths, all right? So I'm sure if you ever spoke to Graham, he'd tell you no doubt it was well worth it, all right? And there's a lot more we're going to show him as well. So anyway, if you guys are interested in doing it, look, we'll probably speak to some of you guys tomorrow. You're more than welcome to give us a ring. We'll be here. Some of the traders will be here on the desk, or most of the guys will be here. Here's my details, and you can call now if you want to. So the guys will be here. What I'm going to do, I'm still going to answer the questions. Don't worry, I haven't forgot. Just this stuff I need to get through before they kick me off the webinar. I'm going to post my details here in the chat for everybody. So fingers crossed. Can you let me know if you get this? Oh, Rick, I'll answer. Don't worry, mate. I'll answer. I love questions. All right. Did you guys get that? You have to answer that question for me. Yep. Excellent. And then what I'm going to post as well is, I know I've really run over this stuff, but I certainly encourage anybody who's interested or wants to know more to actually give us a call, because we can't talk about everything, of course, in a free webinar, because we don't have time, and also because it's free, and you know, we don't give everything away for free. Sorry. But I'm going to post the Algo conference video, and you can have a look at that, and then you can find us on the website and everything, and ask us some more questions. I will post that in a sec. This thing's just slow down. So yeah, there's my details. Give us a call tonight, or give us a call anytime. You probably will end up talking to one of the guys here. Like I said, if you want to learn to do this for less than $1,500, you can do what Graham did. Start building some models, get access to all the videos and everything that we do. I'm always very careful about what I say, because I know there's a lot of people who, how can we put it in a nice way? They claim a lot of things about trading. We do it professionally, all right? I've heard a lot of stuff that I don't necessarily agree with, but I would be very, very confident that anybody that wants to learn to build systems like this can actually do it if they come and see us. So I'll put it like that. All right, let me have a look at some of these, and I will post that Algo conference link. So hang on, I can post that link now. All right, there's a link. So watch the video. The guy, actually, I said, one of the guys that came here before, Lorenzo, thanks for putting together an awesome video. I'm trying to post this, guys, but it's just, there we go. Cool. All right, let me come back to some of these things. I can see some questions here. I can see hi, Eddie. All right, let's have a look. All right, I will stay for as long as I can. All right, let's have a look. We did have quite a few people here tonight, so we had over 500 people on the webinar. Let's have a look. Okay. Sorry, guys, bear with me. Just trying to find where they ended. Okay, actually, Roy, good question, says, where can you find the tool? Give us a call tonight on the details I posted. You can go to the website. We've got a chat there. You can chat to us, and we can explain how you can get access. All right, a few questions there about the actual settings. Again, give us a call, or try and speak to one of the traders here, and then they can organize the settings for you. All right, because there's a few settings on there. All right. There you go. Rick says, here's this getting into the serious questions. Rick says that with the markets closing over the weekends and massive gaps, what happens with the system if it gets into a trade on a Friday and there's still a trade, and then basically you have a big gap? Well, the same thing happens if you place the trade manually. If you're in it, you're in it. So that's one of the risks. So either what you have to do is you have to close it out, or you're going to have to accept the risk. So either trade in a size that's acceptable, or like I said, you're gonna have to take it on. So unfortunately, not much you can do about it other than those. Someone says, what is EA Lab? Is it a TradeView product? It is a TradeView product. So basically, we found that there wasn't anything out there to do what we needed to do. A lot of the guys here can't program, believe it or not, the algo traders. Excuse me, Rob the head trader can't program, and he owns an algorithmic trading firm. So some of the guys here can program, but even they use EA Lab. So we built that so that we could build models. All right. Okay. Thomas has left. All right, well, I won't answer your question, Thomas, sorry. Okay, can't hear any sound. Okay, it's too late for that. Johan, how are you? He says I made a mistake in there on the build, which I think I did, but got a bit nervous, mate, sorry. Sophia, which servers handle this software and what's the lag time, if any? So we actually, we run all the EA Lab stuff. And basically the way it works is you build using EA Lab, so it's browser based, and then you download the EA that you build and install an MT4. So you can just run that on your computer or a VPS if you want. I run mine on the computer. All right, Chris pulled off the same mistake as Johan. All right, good, you guys are sharp. Daniel, I think there's a typo. Sorry, same mistake. Can it be used for HFT, says Sophia? The true HFT is really probably millions of trades a day, or maybe even millions of trades in a shorter time frame than a day. So we're not really building anything like that. We do want to get into some HFT, but it's not what we're doing with EA Lab. The style of systems that you can build with EA Lab, you can build all the models we run here. Pretty much anything that you guys could think of, I would say, you'll be able to build. Gerhard. He's left, but he wants to know why I was running on a low time frame. Why not? Okay, someone can do more hodling to the moon. James, that is. He's a bit obsessed with hodling there, I think. Okay. All right. Another question about the end of the week. That's all good. All right. Okay, Stefano, that's all right, it's a good one. A bit reluctant on strategy testers as I've tested a lot of EAs, and what looked great on last year's data worked very bad on live data. Basically, Stefano, I think there's a couple of elements to it. With testing, it is just that. It will give you an idea of how a system could perform, okay? So obviously it doesn't guarantee that you're going to make money because we don't know what's going to happen in the future. But what we could be pretty certain of, and I'm sure you guys will agree, you build something and see how Graham's here. He's got a little bit of drawdown here, but it's less than 2%. And then it goes in the right direction. I mean, we'd like to see some more trades, but 179, decent amount of trades there, Graham. It starts going in the right direction. If it went in the opposite direction, I'd be pretty sure that it's not going to work. Something like this, I would say, has a possibility to work. We might do a bit more testing. All right, so strategy testing does give you a good idea. Also, you do need to know how to test correctly. So in the workshops, we show you the correct way to back test. A lot of people think they know, but they don't. All right, Russell says, what size account and trade size? Like I said, IC offers quite a small contract at 0.01. So I'm not going to make any recommendations on your account size, but you don't need a huge account if you trade in small size. All right, I feel about the weekend. Look, all you guys thinking the same. Fantastic. That one about margin I answered. All right. Where do we get the data from? The data is just in a platform. So I think if you log into an IC Markets Live account, which you all have, of course, then I think it just will give you all the history for Bitcoin, actually. So there's quite a bit of data there. It's not, hasn't been around for that long. Okay, what have we got? Rick was talking about the large spreads and potentially take out the trailing stop. Oh, Rick, great questions, mate. I hope you're still there. That's why we give it plenty of room for things like that. Okay. How do you counter bad news like hacking, says John, and South Korea shutting down the exchanges? I mean, basically, that's reflected in the charts. So, things like that, again, if you're going to have a tight stop, you're probably going to get stopped out on all those things. Well, we don't know what's going to happen with any of the cryptocurrencies. We know that it's very volatile, and we know that it could also go to zero. So, unfortunately, there's not a lot you can do. We just try and take control of whatever risks we can. Henri's left. Oh, poor guy. He's never going to find out whether the testing takes into account the spread and commission, and it does. All right. Okay, Stefano. If we're applying on the M15, the highest high we use is the last M15's bar high or low, as we did. Correct. But on the 15, yes. Okay. Chris says, what's a good source of data? I think the IC data is fine. Stefano, have we done these on regular Forex? Yes. Like I said, this one, so the actual idea you can use on different products. Because we know that cryptos are going to be quite volatile, things like trailing the stop, that's where we might adapt a strategy, for example, to give it a little bit more room because we don't want to get stopped out, or we might tighten it up on other products. So with a lot of other products, you can basically get a decent idea of what the volatility is going to be like based on historical data. Cryptos, don't really have a good idea, except we believe it's going to be pretty volatile. So, yes. Okay. Do we develop strategies for binaries? We don't trade any binaries, Freddie. Sorry, no. Okay. All right. All right. A few of these people would like a recording. IC Markets might record them. I'm not sure. So if you speak to us, then we can see if we can organise something for you. Give us a call. What's the execution time of the orders on Bitcoin? With IC Markets, pretty much things get executed instantly. One thing I will say, okay, for you guys out there, with something like cryptocurrencies, again, is very volatile. You can expect spreads to widen. You can expect in really volatile times to not get filled at the price that you want. That is all part of trading. So it's not, that the broker doesn't want to fill you. It just doesn't work like that. You can't get a perfect fill in a really volatile market, and the spreads will blow out. That is a part of trading and taking on something like a cryptocurrency. All right. How much does it cost through IC Markets? I'm not sure what you mean, Roy. Sorry. Can you use the automated systems in any other charting package? These ones at the moment, Giacomo up for MT4. Okay. Please don't forget to answer the questions. No worries, Rick. All right. Okay. What else is there? Michael, you're welcome. He's gone. Freddie, yeah, it is. Always get one person ask me, my name is Dutch. Yes, it is. Okay. Tommy, boy, good. I didn't have to answer that one. He wants to know he's got 500 euros. What should he trade with? We're not going to give advice on that. So guys, if you want to give us a call as well, if you've got any questions, I'm more than happy to answer them. Some of the other traders can answer some questions live. We've actually got Chinese speaking traders here who can answer some of your questions. We've got English speaking traders. We have Arabic speaking traders. We've got Macedonian speaking traders. And we've got an Englishman, Marcus. He'll be more than happy to speak to you in English. I mean, with a beautiful English accent. All right. All right, guys, I'm going to wrap it up here now. Everyone's kicking me off. Sorry about that. I would love to stay. But yeah, give us a call. And we've got all these questions here. So if you want to give us a call or an email or anything tomorrow, then look, please feel free to give me a call or any of the guys here. I hope you really enjoyed the webinar. We had really good participation. Thank you very much for coming. Thanks to IC Markets as always. Thanks to Graham for letting me show his email. I'm going to leave you guys now and hope to speak to you soon. Thanks very much. Bye-bye.